Hey guys, welcome back to the channel. So on last Tuesday's video, we spoke about stocks for beginners, and I gave you 5 examples of companies that you can have within your portfolio to give you some form of foundation so that when you're investing, you're not looking at your portfolio like in times like now and notice that all of them are down. I'm recording this on Monday, and yeah, tech is still a mess and there's a lot of stock that are down. And I know if you just started this journey investing, it could be quite discomforting. So the whole purpose of that video was to give you some alternatives that you could include in your portfolio that will give you foundation that you can speculate from. Now, many of you who watched that video noticed that those 5 companies that I gave as examples were all US stocks, and you wanted me to do a video where I give an example of UK stocks that you can use in the same way. So that's what we're going to do in this video. As always, though, I do want to give you context. I want to give you some key things to consider. Actually, just thinking about researching and doing this video, I realized I've not actually covered any UK stocks in any sort of detailed manner since the beginning of this channel, and so I do want to give you some context around where we are right now within the UK economy, Brexit, lockdown, forecasts, so on and so forth, and also just run you through the different kind of markets we actually have, because this is really important if you're going to do your research. And again, you do need to do your research with this video isn't going to give you everything, but it's going to give you some food for thought. There's some other things I'm going to go through as well. There's quite a bit to cover, so let's get going. All right, so I'm going to be talking about stocks. I'm going to be giving you 3 companies as examples that you can use. They're all UK based. But as always, guys, I do have to say this. Please do not take this as financial advice. This is for educational purposes only. So just don't go and take these 3 companies, go and put them in your portfolio just because you've watched this video. You do need to do further research. I'm going to give you a lot of context. I'm going to give you information about these companies. But the information I'm going to give you in this video isn't going to be enough for you to be able to make an informed decision of your own. And as always, you have to make your own informed decision. So, because we're talking about the UK market specifically, I think it's important that we actually start off with, where are we in terms of the economy here in the UK, and what is the forecast? What is the outlook for our economy right now? Bearing in mind that we've had Brexit, and Brexit is still very much a thing, and we're coming out of lockdown now. Touch wood. All of those indicators at the moment are positive. So, where are we at the minute? Look, our economy shrunk by 9.8% last year. Now, that doesn't sound like it's too bad. It's a single digit number. However, when you compare it to other G7 countries, well, we have had the largest economic contraction amongst all of them. And that is going some. I mean, there are numerous reasons that are being cited for that. Mismanagement of the coronavirus response, Brexit are a couple of reasons for that. However, there is a silver lining. A think tank currently and is forecasting at this point in time that the economy this year is going to grow by 5.7%, and we're going to return to pre-pandemic levels by the end of 2022. So I think it's safe to say that given the indications, the forecast is that we'll be back to normal by the end of next year. So the question is, if you're looking to invest in the UK market, where are there opportunities? Now, again, for this video, what I'm going to do is I'm going to be giving you 3 examples of companies that you can have as foundations. These companies will be large companies with large market caps who are very good at what they do, are turning over a lot of cash. But before we get into those 3 companies, I think it's very important that if you are a first time investor, you kind of understand what markets we actually have here in the UK, because we have more than one. And you have to know where you're making your selection from in order for you to make the best decision based on what your investment goals are and a number of other factors. So let's talk about the FTSE 100 and the FTSE 250. Yes, there are two. Obviously, people speak a lot about the FTSE 250. I'm not going to mention the AIM market, which is the alternative investment market, for the purposes of this video. We can talk about that in a completely different video if you want. But this video, we're going to be talking about the FTSE 100 and the FTSE 250, because those are pretty much the 2 main markets that I think are relevant to the conversation that we're about to have. Okay, so the FTSE 100 is essentially the top 100 companies here in the UK. Now, these companies will be multinational companies and they will be trading internationally, earning money in not just in British pounds. So they will be earning money in dollars, they'll be earning money in euros, and maybe a number of other currencies. Now, the reason why this is important is that the FTSE 100 or the top 100 companies in the UK are not necessarily a direct uh, reflection of the UK economy. Therefore, you will find that if you look back in history and you look back to the Brexit referendum results, we saw that the UK pound actually tanked as a result of the referendum results against the dollar and the euro. This is a graph right here. You can see quite a significant drop right there. Now, what you would expect if you were looking at the FTSE 100 and you were invested in the FTSE 100 was that the share prices of these companies would also fall in value as well, because you would assume that they're making their money in pound sterlings. The reality is that a lot of the FTSE 100 do not just hold money or their earnings in British pounds. A lot of it is held in euro and is held in the dollar. And what you saw as a result of that are these two graphs. So this is the FTSE before the referendum results back in 2016, and this is the FTSE 100 after the results. We actually grew as a result of that, despite the fact that the pound had fallen quite significantly. Now, the reason why this is important is because you have to understand the markets that you're invested in. The top 100 companies will be international companies, well known companies earning money in different denominations, not tied to the British pound. They are not a direct reflection of the UK economy itself. The FTSE 250, on the other hand, is and can be classed as a direct reflection of the UK economy. Now, the FTSE 250 are going to be the next 250 largest companies in the country after the top 100. Okay. And these companies are deemed to be nimble, then deemed to be quite innovative in nature. But because they are a reflection of the UK economy, they can, in times like this, where we've gone through lockdown and Brexit, bear the brunt of any economic instability. And this is important because within that lies opportunity and within that lies risk. And when you're investing, it's all about weighing the upside and the downside and making an informed decision accordingly. Now, within the FTSE 250, if the economy has shrunk by 9.8%, then clearly many of you will be thinking, well, that might be a really good place for you to start investing, because what you could do is you could position yourself to essentially get a rise over the next year or so if we are to return to pre-COVID, pre-pandemic levels by the end of 2022. And that may be very, very true. Again, you will need to do your research in the companies that are in the 250 to be able to identify companies where you can position yourself. But for the purpose of this video, we're going to be looking at the FTSE 100 companies exclusively. And I'm going to give you 3 examples from the FTSE 100. Why? Because these companies are going to be large cap companies and they are going to be the ones that are going to be turning over a lot of money. They'll have some free cash and they are not as susceptible to the domestic market themselves. Again, in this example, what I want to show you are companies that you can use to give yourself stability, not necessarily companies that you're speculating on. Yes, you can speculate with a strong foundation. So I'm going to show you companies that could act as a strong foundation. You could have these companies and then also go and buy some FTSE 250 companies if you wanted to. But again, you need to do your own research to identify those companies. Now, you've heard me speak about diversification a number of times, and I think that this is a really important point to consider when you are looking at UK companies. Now, the whole point of diversification is to help you manage your risk, to spread your eggs across a number of baskets. In this context, what we're looking at is a good number of companies, but also a good number of sectors. We would generally be speaking about investment portfolios also being invested across different regions across the world. So, the US market being the largest, you want emerging markets, you want Europe, you want UK, you probably want places like Asia Pacific as well. But for the purpose of this video, speaking about the UK, how do you go about actually getting some diversification? So, one of the first things that you do is you have a look at sectors. So, what sectors do you want to be invested in? Is it financials? Is it going to be in property? Is it going to be in consumers? Is it going to be in basic materials? you need to understand what sector you're going to invest in. And that should be really your first very, very high level port of research. So if you're looking at pharmaceuticals, for example, you might want to take a look at the top 5 to 10 companies and begin to conduct your research to funnel down from there a top two or top three within that sector. So it's really important you understand your sectors specifically because that's where you're going to get some diversification. You're not going to put all your eggs in one basket. So the first company we're going to have a look at is Tesco's. Now, Tesco's is a household company. This is Yahoo Finance. You can see the company summary details right here. And as you can see, they've got a 17.78 billion market cap. Market cap is important because it just is a testimony of the size of the business. And to have a large market cap, then it means you are generating quite a bit of cash, quite a bit of profit as well. We can see with Tesco's, they're paying dividends of 4.4% right here. The previous closing price, literally today, was 227 pounds and 50 pence per share. Now, if we actually go onto the chart here and we go back out to a 5-year period, we can see that the share price has been a little bit choppy and it's a bit volatile right now. We can see that it's down, but from that high that we see right here, that was 312 pounds at this point, and that was only, what date was this? This was the 1st of January this year. We currently see the share price at 230. So some people may argue that they see upside in this if we can return to anywhere near where we were before. But Tesco's, as a solid company at this point in time, has 27% market share when you look at shopping and the space that they actually work in. Downside to them is they do have a lot of competition. Aldi, Lidl have notably been eaten into the share, into the market place when it comes to the competitive nature of their business and their sector specifically. But a good thing about Tesco is when you go and have a look at things like the financials, you can actually see when you look at their balance sheet right here that they have quite a lot of cash. That's 3.6, if you round it up, billion pounds in cash altogether. If you go on to their total assets altogether, they've got over 10.8 billion pounds in assets. And well, actually, no, 45.7 billion pounds in assets. So they are a big and very, very strong company from that point of view. And they're paying dividends right now, which is also very, very good as an investment proposition too. So Tesco's is a household name. It's a company that we all know. And yes, they do have fierce competition, but these kind of companies, and Tesco's has been known to be very, very adaptable. They have certainly reacted to the fact that people are doing so much more shopping online now, and they've been very, very proactive in moving their business model to cater to that, where a lot of other supermarkets have been late to the game. They very much took the ball by the horn and made those changes very, very early on. So Tesco's being a household name, good portion of market share within the space that they do. Yes, they do have some competition, but they have a lot going for the business and they are very, very cash rich as well. So as a foundational company to have within your portfolio, this can give you a little bit of security. It does not negate the fact that there's going to be volatility within the stock, but it gives you the ability to have some foundations with this. The second company that I want to go through with you guys is actually a company called Rio Tinto. Now, Rio Tinto is a company that you would have heard about before because they do pay quite a handsome dividend. They pay a dividend of 0.22% at this point in time. Their market cap is 107 billion pounds. Now, these guys are in the basic material sector. They essentially mine, explore, and they process mineral resources. So, copper, diamonds, gold, titanium, salt, uranium. They actually act in this business. And actually, you look at that sector specifically right now, there is a huge spike in copper prices right now. And when you look at their share price, and we go onto the stock right here into the chart, over the last 5 years, we can see that their stock has actually trended up this entire time. If you go back to this date right here, which is October 2020, this seems to have been a catalyst for quite healthy growth at this point in time, although it has traded off a little bit from that little high right there at 6,352 to where it's currently sitting at 6,119. Now, as a business, they are really, really well positioned, and they do have quite a bit of cash when you actually run through the numbers. So if we go onto their balance sheet right here, you will find balance sheet that the total cash they actually have is about 11 billion pounds altogether. Total assets 97 billion. And if you look at just their revenue on the income statement, their trailing 12-month revenue, total revenue is 44.6 billion. When you read some of the reports about this company and some of the forecasts for this company, they are clearly outperforming some of their peers right now within the sector. So this company again is a very, very, very strong company prospect wise for how the year is going to turn out, particularly with prices of copper actually spiking. They are positioned to take advantage of that and be a bit profitable from that as well. So again, a good company that you could potentially use as an example for stability within your portfolio, so you don't have just purely speculative stocks within there. The last company that I want to show you is a company called Berkeley Group. Now, these guys are in the property sector. Now, they have a market cap of 5.95 billion pounds. They also pay a dividend of 2.44 at this point in time. And these guys, they are responsible for 19,200 new homes in the last 5 years. I did a calculation on this because this is actually quite staggering. In order for them to build 19,200 homes in the last 5 years, it means that they've built 10 and a half homes every day for the last 5 years. They are known to be really, really efficient. So even through the pandemic and everything that we've been through over the last 12 months, these guys are they actually have projects that are actually on track, that are not delayed. So they're not going to be over budget, and they're going to be delivering those on time. And that may sound like a really small thing, but actually it's quite important, because a company, especially in the property business and construction business, that is able to keep to a timetable and be efficient means that they don't incur additional costs where projects overrun on cost and effectively impact the bottom line. So efficiency is really, really, really key, and they are a key player when it comes to construction, retail, homes, so on and so forth. Like I said, market cap at the minute just under £6 billion. Let's go and have a look at their financials. Their trading 12-month revenue is 1.8 billion pounds. Let's have a look at their balance sheet. Total cash that they have available right now is 1.6 billion pounds. So they've got actually cash there. Now, again, guys, I've just highlighted some very, very high level numbers here. This isn't anywhere near enough for you to be like, yep, I'm going to go and buy Berkeley Group and have that within my portfolio. But what I hope that you take from this video is the kind of companies that we've had a look at. So all of these companies are in the FTSE 100, not the FTSE 250. A lot of them, all of them have large market caps, certainly over $1 billion in terms of market cap. That is important because you want a company with good cash reserves. We can see that these companies hold good cash. These are just some of the characteristics that I want you to take away from this video so that you can use those characteristics as a foundation to do your own research into some other companies. Now, in the FTSE 100, there are 100 companies altogether. You have pharmaceuticals in there, you've got financials in there, you've got a whole host of companies. Truth be told, you can look at the top 10, top 20, and pick any one of those companies. Yes, they can form a good foundation for you, but that doesn't negate or dismiss the fact that their share price will go up or down. The whole point of this exercise is if you pick a company that has quite a bit of financial resources, when things do get tough, big institutional companies are likely to flock to those businesses and invest in those businesses, which means you get a little bit of support for their share prices, because that's where the big money tends to sit in volatile markets. So the idea behind this video is to give you some key things to actually consider. Let me know what you think. We've covered a lot about the FTSE 100 and the FTSE 250. Maybe I do a few more videos on the FTSE 250 specifically, and maybe on the AIM market. You have to know what category and where you're picking your companies from and what that essentially means for you. And I just realized preparing for this video that I've not really spoken about this at all on this channel. even though we are based here in the UK and this is a UK channel for UK content. But obviously, the markets and the US market specifically being the biggest in the world is where we tend to focus a lot of our attention because it's sexy, right? Which is no reason to invest at all. But let me know what you think of this video. If you've not listened to the podcast this week, there it is right there. It's definitely worthwhile going to listen to that. So if you haven't already, go check it out. But as always, thank you so much for listening. Make sure that you remember money's a tool, life is for living. I'll catch you later on.